But we begin with our talk of the tape, with stocks' recent surge triggering some positive technical signals as investors look for some de-escalation of the trade war. Have the bulls made the case that a bottom is in for this market, or is this still a typical sharp but fleeting bear market bounce? For answers, we turn to our panel. Warren Pies, co-founder of 3Fourteen Research, JP Morgan Asset Management Global Strategist Stephanie Aliaga, and Truist Co-Chief Investment Officer Keith Lerner. Welcome to you all. Warren, love to check in with you here in terms of what your work is telling you about whether this rally has kind of, surpassed the burden of proof that it's more than just a bounce and, more than just pricing out a worst case scenario in terms of trade impact on the economy.
Yeah, thank you for having me. We're getting close. So, I think that the first thing we told our clients from the get-go after April 2nd is that we're not going to navigate this thing by getting inside of Trump's head and psychoanalyzing the next move or the next tweet, but I do think that the White House is trying to de-escalate the situation. One of the markers we've seen is that Peter Navarro hasn't been on TV since April 13th, and that's corresponding with this equity rally. So setting that aside, though, I think that a confirmed bottom, has two components. You need to see washed out sentiment and positioning. We measure that a number of ways. We measured in the inverse ETFs for retail. We measured for vol targeting for institutions and CTAs for trend followers. And across all those metrics, sentiment is depressed, and that's phase one of a bottom. And then you look for technical confirmation. Philosophically, we're always going to be late because of that ordering, and I think we're getting really close to technical confirmation. We haven't, at close yesterday, we didn't trigger the exact perfect thing we're looking for, but there's been a lot of talk about this wide breadth thrust, which is a similar metric to what we look at. We have a bottom spotting breadth thrust at 3Fourteen Research, and there's been a few other things. We had 3 straight 1% updates with a trailing negative 10-day performance, which has an excellent track record. Historically, there's no negative cases when that happens looking out 1 year. So there's a lot to like about it, and we just are waiting for that final technical confirmation. We'll see how we close today.
Yeah, I was going to say a lot of the work is pointing in that direction that have positive implications for 6 or 12 months ahead in most instances, although, of course, the interim might be a little tougher. And Stephanie, granted, nobody can actually decipher exactly what's going to happen based on the decisions of literally one person. But I guess you have to have some working assumption for how this might play out, or at least what's priced in for now in terms of where tariffs might land and what it's going to mean for the economy and earnings.
That's the real difficulty. What's priced in right now? We think we're past the peak in terms of escalating tariffs, and we welcome a lot of the de-escalation that we've seen recently. But now I think we're shifting into the slower burn around digestion. And this week, we've got more signals that all of this tariff turmoil is starting to really impact supply chains, and it's already making companies today change their decisions. This week, in terms of what we heard from earnings, one thing that really stuck out to me was how companies are rebuilding their war chest. They're figuring out, how do we increase liquidity? Maybe we're prolonging some hiring plans. Maybe we're enacting some layoffs already. And while the consumer hasn't softened yet in its consumption, the anticipation of a softer consumer is already leading to a softening in business activity today.
Sure. Yeah, you saw the CapEx intentions really take a dive and things like that. To your point about companies deciding they'd rather maybe hang on to that cash a little more. Keith, it's funny because the market has seemed to be celebrating these just hints and maybe not very substantive ones that maybe we're going to be working towards some kind of cooling of these trade tensions. On the other hand, if we land at 10% across the board tariffs and then something way lower than where we are on China, that's still a pretty stiff tax on global production and efficiency. So how do you try to think your way through how the markets are going to absorb all that?
Yeah, well, first, Mike, always great to be with you. We use a way of the evidence approach. Some of the things that Warren talked about earlier, I agree with. Some of the technical momentum has been positive. But on the same token, when we look at the way of the evidence, we see more of a mixed picture, and we think that the upside is somewhat capped. Maybe we squeeze, above 5,500. I think the upside in our work is likely capped around 5,800. And the way we're looking at things is, at the lows, Mike, you and I spoke a few weeks ago. Towards the low, we thought we were pricing in a lot of that bad news already. Now, with this rebound, we're pricing in a better outcome at a time where we think the economy continues to likely slow later this year. We are concerned that we may see a little bit of an air pocket later in the year as we're bringing forward all this inventory. And there's also a risk that you bring all this inventory in now and that later on the demand isn't there to meet it, and you have to start reducing prices, which is then the companies have to protect profits, and that's where the labor side could come in as well. Valuations are, a condition. You can't get, you have to be careful not to be too precise, but we are still above the pre-pandemic levels, the peak pre-pandemic levels, at a time where forward earning estimates still need to come down. So, listen, I think that 4,800, 50% retracement is a pretty good low unless you go in recession. But up here, I just think the upside's capped. And again, the risk reward becomes a bit less favorable as you use up some of that energy to get all the way back up here. We're up 14% off that intraday low now.